morning live stream. Now, this is not a doom and gloom video, so before you go nuts at me for the headline, I want to share with you the data that we've got from Wall Street, because there are certain people selling. There is also some good news, though, to round it off. But I always feel it's important to look at the stuff we don't want to look at. I could make a video that just is entitled, NVIDIA to $1 million or something, and we'd get more views for that, but it wouldn't really help you very much. And my mission here is to make you financially free. That's ultimately the goal. And for that, I think you need to understand what's going on in the market. So hopefully the following will provide some value to you. If it does, you know what to do. Destroy the buttons in front of you. So the bad news first, good news follows. So stick around for some optimism. In late 1999, if you recall that, the hedge funds started selling tech stocks very aggressively. And who bought them? Well, retail people like you and me. I bought biotech in 1999. Yeah, I didn't really know what the heck I was doing. And it looked like they were too early to sell. And then obviously they made, the right decision because the market collapsed afterwards. I'm not saying the market's going to collapse here, but it's important when we get similar data points that we understand them. So right here, right now, if you get the musical reference, let me know in the chat. And my whole mind is full of bits of music, because that's how I learned English. It's all like literally, it's all phrases from pop songs. It's very, very disturbing. We have hedge funds selling quite a lot. So they have this thing called the long-short ratio, which basically means, well, they are kind of bullish up here, or maybe the word is more aggressive. That would be maybe the way I would phrase it. Aggressive near the top, and down here they are cautious, very cautious, like a cat. And if you want to see this illustrated another way, there is a little red line on here, which I shall do my best to highlight. That red line here is the aggregate hedge fund net flow. You add together the buying and the selling, and you get the flow. And what's going on with the flow? Well, if you connect the dots, you see the flow is flowing down, right? So they're selling. They're selling fairly aggressively, while the S&P is rallying. Why the heck would they do that? Well, they take profits. They don't just sort of hope and wish and pray it's going to go higher. No, they have usually certain rules to take profits on. And that's actually why those guys tend to make money. But, if you zoom out a little bit, you might actually find some good news here. Fat Boy Slim, well done. You can tell what year I learned English from. It's all that late 90s music. It's very disturbing up in my mind. There's a musical track with it too. It's terrible. If I could sing, it'd be a nightmare. Anyway, the total equity fund flows. So equity is just a fancy word for stocks, right? So the total funds, so not hedge funds, but like all the funds together. What are we seeing? Well, we're seeing quite a nice little rally here. And if you compare it against, say, the 2021 rally, or the 2017 rally, or the 2013 rally, what can you see? Well, I think you can see, my astute friend, that we are not near the top of the flow, which means we could be flowing a little bit higher, right? There should be a song for that, right? So that's kind of positive. So it's possible that more money, especially your money, retail money, money market fund money, which is a lot of the time your money, is going to flow back into the market, and we're going to keep going up and up and up, and the hedge funds are going to be eating their hats. They're not always right. They just have rules and they're cautious. How do you make money? Generally speaking, with rules and caution, right? So we're up so far this year on our teaching portfolio by a whopping $28,000. That may or may not be a lot of money to you, but if you started out with $30,000 the way we have for this little portfolio, then you'd be rather impressive for your friends, because that would have made 93%. I don't promise you returns, but I promise to show you how I did that, and I continue to do that. If you would like to join me, literally tomorrow and the day after, it's a 2-day extravaganza And I'll teach you basically for free our 3 easy rules for potentially making extra money. All you got to do is go to felixprehn.org/challenge and sign up, grab yourself a seat. About 1,000 of you have already done that, which is very, very cool. I'm very excited to spread the gospel of Winston's trading rules. So come and join us there tomorrow at felixprehn.org/challenge. So who's fueling the rally? Well, it's you. It's you, my friends, and to a little extent me. It's retail. Retail. This basically shows you Nasdaq. If I could spell Nasdaq. Nasdaq flows. How much money is flowing in? And what we can see is that we are starting to flow in again, and the trend since January 2023 is pretty positive. So that is why the market is going up. It's retail flows that are actually driving this, not institutions. Toxic thinks retail isn't strong enough. There is a song that starts with strong enough in my mind. But anyway, let's move on apart from the song. So positive, but a little bit of a caution there that our hedge fund friends are not feeling quite so good. But I think retail, that's you and me, has reasons for optimism. And the reason is that, and this is, I believe, from Goldman Sachs, the lovely furry bankers, fluffy bankers, the kind ones, the ones who you walk past them, they go, you want $100? Those kind of people. Always there with their charitable giving and caring for the little guy. That's Goldman Sachs for you. And they're predicting that earnings per share are going to grow 18% for the S&P 500, which is that little staggering rally there. And that would therefore justify stock prices to keep going up and up and up and up some more. So buying might not be such a bad idea. So the next 12 months could be beautiful. Why could they be beautiful? If we get no recession, so if the labor market doesn't collapse, or rather the seasonal adjusters in the labor department stay in their jobs, and manufacturing maybe starts to pick up a little bit despite the FedEx disaster and so on, then if we get no recession, and that's an if, right? And I actually think that's very likely because I think the government will spend their way out of a recession. I mean, wars and everything else, they're great to avoid recessions. You can make endless amounts of ammunitions in the US and send them abroad, blow them up, and then you just make some more because, there's always an endless war somewhere. Because historically, from the first rate cut in the following 12 months, we got somewhere between, we got a 16% rally in the stock prices, which tallies up quite closely with our 18% predicted EPS growth from the fluffy bankers at Goldman Sachs, right? So if there is no recession, the world is wonderful. Then you'll all be singing off the rooftops and dancing in the rain and all that kind of stuff. And you'd be very, very happy. And the hedge funds are going to be, you know what they're going to buy. They're going to make some money anyway. What did Al Capone invest in? Isn't it hookers, drugs, and extortion? I mean, they're quite good, quite resilient business models, but not particularly legal nowadays. Well, drugs are, but you have to be, a pharmaceutical company for that nowadays. Now, there is something big going on right now, and that is Intel. And you might think Intel is over, nobody cares anymore. Remember when Intel was the most valuable chip manufacturer in the world only a few moons ago? Well, they're in such dire straits that the cockroaches are circling. I said cockroaches, didn't I? No, I meant cockroaches. I meant Apollo is originally a distressed asset investor. If you watched Pretty Woman, Richard Gere is a distressed asset investor. They buy stuff, they break it up, and they make money out of it, and everybody else gets sacked. That's where Apollo came from. But they've sort of reformed themselves to the modern times, and they probably have an ESG department now, and they probably have carbon neutral coffee dispensers or something pointless. And they are offering Intel $5 billion for shares, essentially, as a vote of confidence. And you might say, why would they do that? Well, Apollo also financed Intel's European chip plants with, I think, about $10 or $11 billion. So they're getting quite heavy into the whole chip world. And it's just days after Qualcomm's is said to have floated a friendly takeover. So we can get one of the biggest M&A deals out there with two average chip makers trying to make something out of joint misery, I guess. If you look at the Intel stock chart, here it is, a screenshot from TradeVision in its full glory. You had the rather horrific drop here. Let me zoom in a bit more for you so you can actually see what I'm gawping at. And that was the earnings event, right? That was the earnings. Earnings were just horrendous, so we went down. And since then, what have we done? Well, we've kind of gone nowhere. We've just gone sideways, really, not really done a lot here. There is also, in addition, resistance here at $23 and at 25. And that's resistance from the options market, and it's pretty big. It's about 20,000 options or so just for this week. So that red line there at $23 is resistance on the way up, and it's hard to break. Not impossible to break, but hard to break, if I could spell resistance. So would I get in on this? No. But you could say, but Felix, hang on, if you can see that, there was that massive volume on Friday. Wasn't that beautiful? That was just options expiring. That very little to do with Intel. So no, it's still a falling knife. It's still a basket case, and I wouldn't touch it with a 900-foot barge pole. Only sovereign chip maker for the USA. Well, NVIDIA can make their stuff in the USA. TSMC is already manufacturing in the US. Apple chips are now made in the US. So all you got to do is give them enough tax incentive and they'll gladly build the plant in the US and make all their stuff there, if that's your concern. So if you have any questions, my friend, put them in the chat after you've destroyed the like button, of course. Matthew, you got some Intel bags. You mean bags that say Intel inside, or you got some actual Intel? You got some actual Intel. Well, I wish you luck. That would be one way of saying what I think about this. Pre-market is it's a mixed scenario. Apple and Microsoft are down, rarely a good thing. Two largest stock out there, really. NVIDIA is flat. Meta is in the green, as is Tesla, and everything else is pretty much flat. So an okay start to the morning, but nothing to sort of really celebrate about. Nike is dropping again, which is always why I say don't ever, ever, ever guess a market bottom, because it's almost always too early. So this is Nike. And some people were saying, oh, it's brilliant. They broke through the 50-day moving average line here. Let's buy the bloody thing. Amazing. And then it comes back down. It retests it. And that's actually kind of an optimistic, positive bounce up there. Gap up on Friday. But we are below the line of all lines. And that line of all lines, in my humble opinion, is this little purplish line there. It is called the 150-day moving average line. Just a simple moving average line. And if you're below that, bad things happen. Very, very bad things happen. So you don't buy stocks below the 150-day moving average line. Just don't do it. Don't ever do it. And if that's all you ever learned on this channel, then I think you've learned quite enough. So that's all we're going to cover, of course, in tomorrow's trading challenge. Just be one rule. No, there'll be a little bit more there for sure. So shall we look at some of our other favorite stocks here? I can see who's asking about Palantir. Adrian is. Palantir is, well, it still looks pretty good, doesn't it? But it's consolidating a little bit here. doesn't necessarily mean anything. I mean, you just don't know which way it's going to go, though. That's what happens with like consolidations. It can go up, it can go down, you don't really know. So it might do this and then break out, or it might do what it did here, come down, or what it did here and then come down. We don't really know. The massive, massive volume we saw on Friday, completely ignore that. There's a huge amount of options traded on Palantir, massive amounts. So a lot of those expired, and that kind of explains what went on there. So would completely ignore that, basically. It was just a huge options expiration. Doesn't really matter a great deal. Now, would I buy at this level? No. No, I'd wait till we get closer back to the 50-day moving average. And maybe we don't. That's also okay. Because if you're driven by FOMO, you will always lose money. So you have to get rid of the FOMO thing and just be like, yeah, don't really care. Don't really particularly. You see, it doesn't matter what stock you make your money with. And I think once people realize that, slowing down a little bit? No, we're still pretty much on trend. It really doesn't matter what you make your money. I couldn't give a hoot. I was going to swear there, what we're making money with. You know, we've got a trade open at the moment, me and Winston, on FOA, Finance of America companies, for example. Do I like that business? No. Do I like the company? No. Do I know who the CEO is? Nope. But we got in somewhere here and, you know, we're up very, very nicely. So it doesn't matter how you make your money. You just got to have a system and rules that actually work. Carp is not a ticker, but yes. Okay, let me see here what other people are showing out there. Jordana, because you wrote BAC 4 times, I'm going to ignore it just to be really irritating. I know. It's the power of the little man with a YouTube channel. No, don't worry. We'll get to it next. We'll look at it after Sofi. We look at some banks in a row here. Sofi is it's an uptrend. It looks pretty nice. We bounced nicely here off the yellow 50-day moving average line. Coming down a little bit, hitting our head up here at sort of 850. That's still the resistance. You got to break through 850. So yes, we have a Sofi trade open. That's got a long horizon. It's basically like a stock hold. So I'm happy up here, but do I buy at the top? No, I try to buy somewhere close to the 150 line, somewhere around here. So I'd probably be a little cautious and just see if it tumbles down a little bit more, and then it'll probably zigzag back up. At least that's my hope for it. Now BAC, so that I'm not a tyrant. Zoom out a little bit. So what have you got? Well, let's take a pen and actually walk through this. It's kind of an interesting example here. So we topped out up here, right? Came back down pretty aggressively. And certainly here would have been an exit symbol. And hang on, do we have an indicator on this? Yeah, actually, look, that told us to exit up here. You see that? It actually said exit here at 42.30. That was a pretty good call, right? It said exit. And our little indicator here has beaten the market by about 38% over the last year and a half or so. Came back down, and then here it said buy, which was perhaps a little optimistic. Dropped a little bit again. It's trying it again here. I think it's got a slightly better case here, but what I don't like is that we haven't exceeded these highs here. So I would like to, if I draw a trend line, and that's what I always do, always draw trend lines. Makes it much, much clearer. I'd like to see us break through the 41. Break through the 41, and we're talking. Now, there is resistance at 41.50 and at 42, which is typically there, just above where you want to go. So that's going to hold you up a little bit. But if you come out of that, then I think you've got a decent chance here of a rally. So it's optimistic, but not looking wonderful right now. Tesla. Okay, we'll look at Tesla. Tesla. If you want to understand more about our system, because it's ultimately, yes, in reading charts are super important, but ultimately you need to have rules, you need to have a system. Without rules, you will fall flat on your face, even if you can read a chart. So learn my rules with me tomorrow, felixprehn.org/challenge. It's completely free of charge, and you walk away with that knowledge. Tesla, I like it here, and I think you could make a case for a buy signal. If you're more cautious, basically here, that would be a buy. If you're a little bit more aggressive, you would have maybe bought a few days earlier, right? And that's sort of what we did. We've been in on this for a little while. And now we have some resistant lines here, which I painted in at 250 and 260. So these two lines here, you got to get through those. There's quite a lot of resistance there, and that also coincides with that. And that might take us till the robo-taxi event. And maybe it'll be a flop and we bounce back off and we come back down and we find our feet again at $200 and we do the whole thing all over again. Entirely possible. But at the moment, it's a pretty healthy uptrend. It's looking good. It's looking good, at least the way I see it. CEG, our carbon neutral friends who are going to save the planet. Thank you so much, Constellation Energy, for restarting a 30-year-old nuclear power plant with a dodgy history. It's just what we love Uncle Bill for, right? Savior of the planet. Yeah, that was people didn't think you could restart plants that were that old. So obviously very, very good for them. Massive blow up. Now, the funny thing is, somebody always knows something, right? And that's the beautiful thing with charts, is that if you just draw a line here from if I'm allowed to draw a line? From the previous plateau across, and then you see here where we started to pick up steam, and guess what? We kind of got bullish signal here on the 13th and the 16th, certainly on the 17th, the day before the announcement. And then guess what? It went to the moon because somebody's always heard something. The chart knows all. So watch the charts, my friend. That's all I say to you there. But yeah, it's a beautiful candle. There is no resistance overhead. So yeah, it's a rally and a half. Let's see how they do today. But yeah, looks like a great trade. Why doesn't OI change when there is massive volume? Open interest are the positions placed. Volume is actual trades that day. So it's very different. So open interest grasps all the trades that have been placed whenever they were placed, months ago possibly, whereas vol is just a particular day. Crowd. All right, let's have a quick look at that, guys. Market opens in 6 minutes. Crowd strike. That's quite a nice breakout, actually. Oh, very nice breakout. Didn't see that. So if you just, 1, 2, 3 here, breakout above the 50, nice big volume there on Friday. The only problem is we're still below the 150. And secondly, the moving average is still sloping down, the yellow one here, the 50-day. So I would probably wait till we exceed here the 310 and then I think be in. And you might say that's too late, but I'm rather cautious than too early. Opinion on the luxury sector, like LVMH. I think short-term bearish, long-term bullish. Why? Because what's the ticker? We haven't got it in here. Because well, rich people are still rich, and they will still buy more stuff. It's just there is certain slowdowns in certain markets that are hitting them kind of hard. So just expectations were super lofty. So we're coming down again. But I mean, zoom out, right? Just literally zoom out on this thing and see where we are. We were in 2020. We're trading at $360. Now we're almost still double that. So it's still a very, very beautiful run up. But yeah, it's a little bit of steam's coming out of that. And that's okay. Now, when should one have exited this if you trade this as a trader? Well, I think up here would have arguably been the point when you broke through the yellow 50-day moving average line. That would have been exiting at 887. And then here you had another opportunity where we broke through the 150 and the 200-day moving average line, which was at about 814. So it's not like you have to ride the cycle out with everything. You don't have to ride the down if you don't want to. You just need some rules that make sure you stay up, right? Mark, what was my reason to go to FOA? Sector booming and stock chart. Very simple. Good volume, nice breakout. I didn't do with options. There's no options on there. Just buy the bloody thing, and I think it's up 25% or something like that right now, which is pretty sweet. ADM, appreciate that. Any questions, my friends? Put them in the channel, in the chat, and we are going live in 4 minutes. Pre-market looks mixed, I think would be a polite way of putting it. Tesla is green. Microsoft and Apple are both down. Meta is green. Everything else is basically flat as a pancake. I don't write down my average cost. It won't be pretty anymore. I think it's a myth, really, this whole... We've been all indoctrinated that, you have to buy the down to enjoy the up. It's just not really true, is it? You could have gotten out here, and you could have bought back in here, and you would have gotten that rally up. You would have gotten out again. You would have actually made a profit, and you wouldn't have been sitting there as a bag holder all miserably. And now you're doing all of this here, right? It's just, for some reason, the industry has conditioned us. Oh, you liked LVMH at 900? Well, you must love it at 600. Well, what if it falls to 500? You still loving it? You still enjoying it? What if it falls back down to 350? Are you still having a good time? And what happens is that people then wait and then they sell at 350 when they should have actually sold up here at 900. So the whole buy and hold forever and average down it's kind of bollocks. But that's just my opinion. So Carl, you're watching from the gym. That's a very good thing to do. Well done. USO. Okay. US oil. I mean, I don't have particularly strong views or insight into commodities. It's a lot of politics and what the government does in the Middle East and all that kind of nonsense. From a chart point of view, I don't buy stuff that has a falling 50-day moving average line and has just gapped down. So it's recovering, but I wouldn't touch it here. That would be my view here as a sort of trader. Right here, one market till the market opens, 1 minute even. Anybody wants to know what's going on there? Just liking the video, stop the advertisements. I don't have them on, my friend. It's some weird thing. It seems in certain parts of the world, YouTube shows ads without me consenting to it. Can't really do anything about that, unfortunately. The buggers just do whatever they want. I've complained to them many times, and they say, report it, we're looking into it, we'll get back to you. And they don't. So there we are. Dell, yeah, falling knife. Falling knife. That's what it is right now. It's still falling 50 moving average. I think in theory it should do very well, but let's see once we get above sort of 125 again. I think that might be the entry point for Dell. Now the markets are now officially open. Let's have a last look at NVIDIA because someone just said that. Who was that? Lawrence. sideways consolidation, right? It's just sort of not really going anywhere. Volume isn't particularly strong. It's just making out with the 50-day moving average line. We've had a high here. Next one was lower. That one was lower. It kind of looks like the current one might be a little bit lower too. So we're losing a little bit of steam here. So it's, well, if you're a trader, it's where you exit. If you're a buyer, it's where you wait. That's the way I would look at that. Lucas, appreciate that. Now, let's have a look at a couple of minute charts here to see what's actually going on here pre-market. So NVDA is slightly in the green, 0.5 percentage point up now. Actually, that's a nice little jump since the market opened. Palantir is down 0.5 point. That's kind of neither here nor there. It's still trading at $37. Sofi is flat at $8. It needs to break $8.50 to really meaningfully go up, at least in my humble opinion. Tesla is up very nicely, 2.6% here at 244, which means our Tesla leaps are printing money. Yep, brilliant. And PayPal is, well, also flying, 77.70, which means our PayPal leaps are also making money. The other thing we got on is industrials, which are not really going anywhere yet, but we'll see. We've got some patience on that. Goog popped, says Mark. Yep, 1% up, which is nice. What about Intel? There with all those rumors, up 3%. Still meaningless though, because they've dropped too much. Felix going to Vegas for Christmas. That's definitely not happened, Danzo. If you're going, I mean, enjoy, but casinos and me don't really work. I just don't get it. Just don't get it. I know there's more than that in Vegas. There's also lots of sand, but no, not really for me. Anything else you want me to look at, my friends? Anything at all? Any questions? Put them in the chat here. Let's go back to the beauty that is NVIDIA's little mini rally here. Well, 0.5 point up is better than nothing. Tesla is particularly giving us some joy here this morning, up 2.2%, which is quite nice to see. And how's our other little trade doing here? FOA keeps delivering the goods, which is very, very nice. Poker is fun. Yep, there is some skill in poker. I appreciate that. That's very, very true. VIX is up somewhat, but only at 1640, which is, decent. Poet, somebody keeps mentioning, is apparently flying 14% up. What the heck are they doing? Let's have a look. It's a rally, but actually, if you look at the chart, it's not that unusual, right? It's a stock that just does these crazy moves, so wouldn't really put that much on it, to be honest with you. It's just kind of the pattern that we keep seeing, obviously very heavily traded stock. AXP, we haven't looked at that in a little while. That's just flying. Amex, beautiful thing. Yeah, just is that an all-time high? I think it is, right? Yeah, all-time high. So it just keeps going and going and going and going. Now, for me, I try not to buy things too late. So the bounce off here, I think that would have been the time to nibble on it at 245. Now we're $30 higher. I'd be a little bit cautious there. Would you buy Intel at this price? I certainly would not. You're obviously welcome to do whatever you like. I certainly wouldn't. Shopify, still in that, all of this here is resistance, right? That sort of whole 80 to 85 zone. That's what they need to break through. If they do that, then I think you're flying. And there we are, my friends. So come and join me tomorrow live at felixfriends.org/challenge, and I will teach you how we've done this little feat. Where is it? Our little feat. Here it is. How we've made 93% so far in our portfolio trading this year in just a couple of hours a week. It's rules-based. I'll teach you the rules because you deserve to know how they work. Our goal is to make 1 million people financially free. If you want to maybe be part of that gang and learn how it really works, then come and join me tomorrow at 8 p.m. Eastern time at felixfriends.org/challenge. You got to sign up for it first. And I thank you for watching. I thank you for tuning in, and I wish you a glorious